Hi guys, Metalhead here, and today I wanted to go slightly off-piste and talk about some of the other investments that I hold and make alongside precious metals. Now look, I love bullion and I love stacking precious metals, but this isn't the only investments that I make. I'm actually a big believer personally in managing your wealth holistically across different types of assets in a diversified manner. And if you like this sort of video, please do let me know in the comment section. I know it's a slight digression from my usual precious metals content, but I'd be very happy to talk more about my other investments I'm involved in. Please do note, of course, the usual disclaimer here. This is by no means a recommendation to invest in any of the particular investments I talk about. It is simply just a reflection by myself and an account of what I invest in, which may or may not be suitable for you. So without any further delay, let's get into the video. Now, the first investment that I make other than precious metals is shares or equities, or as our friends in the US would probably call them, stocks. I'll just put a little subheading here. I'll do this as we go through. So equities, and yeah, I've held many different types of stocks and shares over the years, and in simple terms, a share or a stock represents a percentage ownership of a publicly traded company. I've owned all sorts of different types, as I say, over the years in sectors such as banking, insurance, mining, utilities, amongst others. And the aim has always been to make money on shares via, firstly, capital gains, capital appreciation, so the price of the shares going up from when I've bought them, in combination with income / dividends, so a share of the profits, usually on a quarterly, maybe on an annual, maybe half yearly basis. And when you combine them together, that's what we often call the total return. So I look to make a total return on any stock investments that I make from capital gains and dividends. Historically, I used to invest in individual shares. I will say in recent years, I've transitioned slightly to using ETFs or passive funds. I'll just make a note of that on here. So ETFs, passive funds. Please excuse my writing. And what an ETF and a passive fund give is sort of broad brush market exposure, in this case to the equity market. So for example, that could be an ETF that tracks the S&P 500, the 500 largest listed companies in the US, or perhaps the FTSE 100, or indeed the entire global stock market. These ETFs or index funds are what they know as passive funds, in that they passively or blindly follow the index in the way I just described, so the S&P 500 or the Euro Stoxx 50, whatever that might be. I also do hold and have held previously some active funds, and specifically investment trusts is an investment that I've made traditionally, which are more expensive generally than passive funds, which are a bit cheaper. That's because ultimately you're paying a fund manager or an investment trust manager to outperform the relevant benchmark. Now, I tend to only hold these in particular sectors that are a little bit different to your mainstream, particularly developed markets. So for example, more illiquid markets such as property and infrastructure, or to some extent emerging markets and frontier markets, infrastructure, private equity. And this, for me personally, represents a smaller part of my overall portfolio, typically around 10 to 15%, I would say. See if I can put this on here. Investment trusts. Alongside equities, I've also held, although more so recently, this has come onto my radar again, but bonds. Now, when I say bonds, what I mean is an IOU effectively to the government or a corporate. So I've held government bonds and corporate bonds. And the main two ways, again, I look to make money off this. is traditionally that's been the coupon, so a regular income that you receive from buying bonds. But actually, just lately, bond prices have dropped a material amount, given interest rates have been going up across most economies around the world, including here in the UK. There are arguably opportunities in bonds where the price has dropped below its original par value, and there's a potential to make a capital gain when the bond redeems at par. That's getting a bit technical, but effectively there's these two different ways that I look to make money from bonds. As I say, in the last sort of 10, 15 years, when interest rates have been near on zero, these haven't been too interesting for me. But in the last 6, 7 months or so, since or even more now, actually thinking about it, 6, 7, 8, 9, 10 months, something like that, since interest rates have been rising here in the UK and across the pond in the US, there's some attractive opportunities. So I've been buying bonds. I also invest in property. I own my own home, my primary residence. So debatable whether that is an investment as such, but I do own my own primary residence. But I also own a buy-to-let property. Just jot that down here. And again, similar to the shares, really, the idea here is to make money from my buy-to-let property through a combination of capital gains and rental income. I also borrow against that buy-to-let property, so I can use leverage. I can borrow and then use that money that I would have otherwise sunk into that property elsewhere in some of these other investments. And as long as I can earn more on these investments than on the cost of the debt, I'm quite happy to do that. Clearly, that becomes a little bit more challenging when interest rates are in the 4 or 5% versus when they were, sub 1%. On buy-to-let property, generally there's a relatively steady stream of income, although one of the downfalls is that tenants, of course, can choose not to pay rent, either because they can't or for whatever reason they just don't want to. And I had an issue with that myself a few years ago. So it's not a completely kind of foolproof method. There is also here in the UK in recent years, I would argue, increasingly punitive tax treatment of property, which in my view makes it less attractive than it used to be. For example, mortgage interest can no longer be fully deducted against your rent, against your revenue, and you are taxed effectively on the gross rent roll, minus a few deductions here and there. There is no silver bullet answer to that. I mean, some people will talk about putting the property in a company structure. Depending on how many properties you've got, that can be a good decision. It might not be. There's no real silver bullet answer. The government have clamped down to some extent on the profits made by landlords. They're also talking about tighter EPC energy efficiency rules coming in down the line. But having said all that, my view is that if you have a buy-to-let property and it's structured effectively, particularly with leverage for myself, I hope, and certainly my plan is that the longer-term capital gains can outweigh the pitfalls of buy-to-let investment. So for myself, I'm happy to hold my buy-to-let investment for now, although clearly that could change as my circumstances change. Aside from property, equities, bonds, ETFs, investment trusts, I also actively manage my cash allocations, and again, increasingly so now. You can get a bit more return on your cash, so that's cash in various higher interest-bearing accounts, for example. A little bit of a dabble in crypto in recent years. Not a huge part at all of my investment strategy, but I have held Bitcoin and Ethereum, and of course, precious metals also sits in there alongside everything else. A bit of silver, a bit of gold, and a bit of platinum. Looking at this actually and reflecting, perhaps I'm maybe a little bit too diversified, but nobody could accuse me of not being diversified, I don't think. As I said earlier, this is just a reflection of what I do and how I manage my investments. You can see the precious metals, the usual focus of my channel down here. But you can see, you know, it's actually a relatively small part of the overall picture. So, you know, if anyone is interested in hearing more about, you know, any of the other investments that I make, please do drop a comment in the comment section. I'd be more than happy to talk about any of these in a bit more detail. Thanks for watching, guys. Hope you enjoyed. And until next time, happy stacking.